Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Guys, today we again will take a look at the New Zealand dollar because as we have discussed in our weekly research, New Zealand dollar right now shows the most clear and promising setup just because we have the pattern on the weekly time frame chart, and this pattern has really significant potential that probably will let us to trade within the 1 or even 2 weeks in a row. That's why it's very interesting, and it's just simpler to deal with the clearer patterns and these setups compared to some other currencies where we do not have such sort of the issues right now. Well, another interesting currency pair right now is the Canadian dollar, where we expect to get the butterfly sell on the daily time frame chart. Maybe we will prepare the update within the week on the Canadian, but today we will focus again on the New Zealand dollar. If you remember, our concern on the weekend was not in the direction that we have estimated as the down, but concern stands around when market should start this action down. So initially we have the two setups. The first one suggests that market should start downward action immediately because it has completed the major ABCD pattern, initial ABCD pattern that has triggered the retracement up, and we also gravitate to this opinion. Conversely, if we will take a look at this ABC pattern, it's great ABCD, market hasn't quite reached the target of this ABCD, and we said, well, it's possible that market could show a minor spike up, hit the target, and then turn to the downside. But right now we see that our suggestion that we treat as the most probable has started to work, and this is very good because simultaneously we have market keeps the validity of the bearish stop grabber that we have on the monthly time frame chart, and in fact that is very useful and valuable support for our opinion, because when you have in the background of your trade significant pattern on the weekly time frame chart, it just increase your confidence. So we'll take a look at the weekly chart. You'll see this bearish grabber that has become, just a minute, I will add the MACD predictor, that has become the background for our trades. That's it. And we said until market will hold its top and we stand below it, this pattern will be valid, and the target of this pattern, these lows. So market should return right back down and clear out these lows. It doesn't mean that it will continue move lower for sure, but it just tells that market should clear out of these bottoms. Maybe later market will turn to deeper retracement to the upside. We also have discussed this in our weekly research. But right now we are trade this pattern and this target. Well, if you haven't taken the position based on this grabber yesterday, it's probably do not be upset, because it consists of pretty room till this target, and I would say that probably market will take the two-leg downward action, because you can see that our sold stands on a road to these lows, and probably market will need to show some retracement when it will meet our sold, because it will continue move right down without any pause. So it probably will show some ABCD or something of that sort to reach this level. So that's why if you haven't taken position here, don't be upset, because you right now could use some retracement up from this action to the downside and take the short position. Now you can see that market is struggling with the monthly pivot point and return right back below, trying to enter this previous consolidation. When the market returns to the previous consolidation, it means that it will pass through it to the downside, and that just confirms that market could really reach our target right here. So in general, situation right now looks bearish, and now we do not see any signs that could put some questions or shows the flaws in our analysis. If market will move deeper inside of this consolidation today, that just will confirm that our analysis is in general correct, and we should stand on our opinion that market continue move lower and grab stops below these lows. So on the 4-hour time frame chart, that's the setup for those who would like to take the short position. You can see market has passed through the weekly pivot support 1, and that tells that's not just a retracement on the long-term bull trend here, but that is the breaking of the trend, and that confirms that market has returned right back down to the bearish action. Also, guys, we talked about this nature of this action that on the daily time frame chart looks really as a retracement. Anyway, you can see that market right now is approaching to the strong support area on the intraday charts, and 74.12, 74.21 is the confluence support. That's also the upper border of this consolidation. So the first touch, market could show some bounce up out from this area. That will be the chance for taking the short for those who would like to take the shorts. So first, today, if you would like to take the short position, wait when the market will hit this support area, then wait for the bounce, and then you could watch for these levels. That's the resistances the market could meet at the bounce out from this support on the 4-hour time frame chart. The first level is 74.80. Probably it will drift a bit lower. All levels will drift a bit lower because, as you can see, market hasn't quite reached this level yet. So when it will happen, then the correspondingly these levels also will be adjusted a bit lower. Anyway, you could watch for two levels. The first level is 74.80 as it stands right now, and the second one is the confluence resistance, 74.94, 75 even. So that is where they stand right now. But as I said, when the market will hit the support on the 4-hour time frame chart, these levels also probably drift a bit lower. So that's the levels that you could watch for potential short entry. Any of them will be suitable because right now market is not ever sold on the daily chart, and hardly it will show a very deep retracement. It's most probable that it will stop here or here. Anyway, despite where you will take the position here or here, it's better to place stop somewhere above confluence or even above the 618 resistance. That will be just safer. And then when the market will reestablish move down, you could adjust your stop lower. So you probably know how to do this. So that's our current view on the New Zealand dollar. As you can see, the motion that we have expected has started, and now we will trade this action to the downside. Probably it will take not just 1 week, and probably we will stand with this action 1-2 weeks. That's really very nice, since we know the direction, when we have the pattern, and all that we should do right now is just to take the position in the correct direction and watch for retracement, watch for rallies, for applying the scaling, or for adjusting the stops, because the major moments we already know. We know the target, we know the direction. Now just we need to catch the right moment for taking the short if you didn't do this yesterday. So let's see what will happen. As I said, the New Zealand dollar right now provides really interesting and clear setup that's worthy of our attention.